Welcome to Signal Stock. Last week, we built a starter portfolio from the ground up, one stock per sector. Today, we're asking a different question. Of all the stocks on your radar right now, which ones actually need the AI boom to keep going, and which ones don't? If you've been watching the market this week, you already know something shifted. AI and tech stocks have been selling off hard. Microsoft just had its worst month in over 2 decades, NVIDIA is down sharply from its highs, and the names at the center of the AI boom have taken a beating. Now, 2 camps are forming. One says this is the beginning of the end for AI stocks. The other says it's a buying opportunity. We're not joining either camp today. Instead, we're going to build something more useful, a set of stocks designed to hold up whether this boom recovers and keeps running, or whether this week turns out to be the start of something bigger. 8 stocks sorted into 3 simple moves. By the end, you'll be able to look at your own watch list and know exactly where each name stands. So let's start with why everyone's nervous, and why this week's sell-off isn't just noise. Picture the AI world as a small circle of giant companies. One sells the chips, a few build the data centers, a couple make the software everyone's racing to use. And right now, a staggering amount of money is flowing around that circle. These companies are buying from each other, investing in each other, paying each other. When money moves in a circle this fast, the sales numbers look enormous. Everything looks like it's booming. But there's a catch. If just one part of that circle slows down, if one big spender pulls back, the whole thing wobbles because so much of it was leaning on everyone else. And there's a second thing most people miss. The expensive chips at the center of all this don't last. In about 3 years, they're old news, replaced by something faster. This week's sell-off is the market starting to ask those questions out loud. Now, none of this means the boom ends here. It might recover and run for years. But it does mean you should ask one simple question about every stock you own. If that money slows down, does this company get hurt? Hold on to that question. It's the whole game. That one question sorts every stock into 3 groups. Group 1, the companies that make money no matter what AI does. These are your foundation. Group 2, great companies doing real business, but where the share price is quietly betting, the boom keeps going. You can own these, you just hold them carefully. And Group 3, the long shots and the hidden risks, the ones to keep small. Let's fill in all 3, starting with the safest. Your foundation is the boring part, and boring is exactly what you want here. The first one, Microsoft. Microsoft is the safe way to own the AI story at all. It's one of the biggest, most profitable companies on the planet, and it pays for its AI spending out of a business that was already a money machine long before anyone said the word AI. Now here's the honest part. This is the stock that just had its worst month in over 2 decades. It's down sharply because investors are worried about how much it's spending on AI. And that's precisely the point. The company itself is rock solid. It's the price that wobbles. For long-term holders, that kind of pullback has historically been a chance to build a position, not a reason to panic. The second one, Eli Lilly. Eli Lilly has nothing to do with AI at all. It makes the weight loss and diabetes medicines you've been hearing so much about lately. It's actually up this week while everything else is falling, which is exactly why it belongs in your foundation. The third is the anchor of the whole portfolio, Johnson & Johnson, a healthcare giant that's been around for decades, raises its dividend every single year, and when the rest of your portfolio is having a scary week like this one, barely moves. Together, these 3 are your base, You own them, and you mostly leave them alone. The next group you own a little more carefully, because these are riding the boom directly. These are real, genuinely great businesses. The difference is in the price. The stocks already assume the boom keeps going, so if it slows, they can fall hard, even though the companies are fine. The first you already know, NVIDIA. It makes the chips behind almost all of AI, and it is wildly profitable. The catch is that a big chunk of its sales come from just a handful of giant customers. And those same customers have started building their own chips. This week's pullback is a preview of how fast that can move. The second makes the actual chips for nearly everyone. TSMC, the quiet factory the whole industry depends on. A fantastic business with record profits, but it now rises and falls with AI demand just like the rest, and its chart tells you it's running hot. And the third is the one that surprises people in this group, Constellation Energy, the largest nuclear power operator in the country. It's signing long-term deals to power AI data centers, which is real and valuable. But the stock has already fallen sharply from its highs as that AI premium gets questioned. It's already off more than a third from its peak. That's the lesson of this whole group. Own them if you want a piece of the upside, but don't let any single one become too big a part of what you hold. Size them so a bad month stings but doesn't sink you. And now the risky corner. Two names here, one that's obviously a gamble and one that is absolutely not the name you'd expect. Let's start with the obvious one, Oklo. This is a company trying to build small nuclear reactors to power data centers. It's an exciting idea, but it doesn't sell anything yet. No product, no revenue, and its first reactor is still years away. To stay funded in the meantime, it keeps printing and selling new shares, which quietly shrinks every existing owner's slice. The stock has already fallen about 3/4 from its all-time high, and it's sitting right near a critical support level as we film this. There is a real moment coming up worth watching, an early technical milestone in its test program this summer. But make no mistake, today, this is a bet on a promise, not a business. Keep it small. And now the surprise. This last name looks like the safest stock in the entire video. It's a giant, decades-old software company, Oracle, the kind of name people assume is steady and dull. But it's down over 30% from its highs. And the reason matters. It's quietly become one of the biggest AI bets on this list. It's borrowing enormous amounts of money to build AI data centers. It's spending far more cash than it's taking in. And a huge share of its future business is riding on a single customer in the AI world. Right now, it's sitting exactly on a critical chart support level, to the cent, as we film this. If that level breaks, there's a long way to fall before the next support. That's why it lives here, in Handle with Care. Not because it's a bad company, but because the risk is hiding in plain sight and this week's market is starting to reveal it. Keep these small. Small enough that if one breaks, it stings, but it doesn't sink you. So put it together, and the plan is just 3 moves. Build your base with the steady, profitable names that don't care what AI does. And notice that this week, while everything AI-related was bleeding, those names either held or went up. Add the boom riders if you want a piece of the upside, but keep them sized so a week like this one doesn't wreck you. And if you want a long shot or two, keep them small. Now notice what we did not do. We didn't call a top. We didn't predict a crash. We just built something that holds up whether this boom recovers and roars higher, or whether this week turns out to be the turning point. That's the difference between guessing and being ready. So here's where I'll leave you. Take your own watch list and run every name through that one question. If the AI money slows down, does this stock get hurt? Some of yours are foundation, some are boom riders, and maybe one or two belong in handle with care. Where do your stocks land? That's the part only you can answer. If this gave you a clearer way to look at your portfolio, consider subscribing. Every week, we break the market down one signal at a time. This is Signal Stock. See you in the next one.